A very good evening and a warm welcome to all of you present here. We are thankful to the knowledge seeking participants to accept our invitation for the presentation on the exciting topic of Catch Them Young, investment in promising unlisted stocks before IPO, organized by Ashutosh Financial Services Private Limited. As the title suggests, our topic for today is a very innovative and interesting one for the investors seeking investment options which are beyond the obvious. Let us look forward to catch this wonderful opportunity at a young stage through this webinar today. We'll begin today's event by our corporate video, followed by an introductory video of today's speaker, Mr. Daxesh Kothari, after which we will proceed towards the core presentation. Post the presentation, we have a question answer session to address your queries. You can click the raise your hand icon in Zoom, through which our team member will unmute you for questions, or you can post your questions in the Zoom chat option or YouTube comment sections, which can be entertained later. So without taking much of your precious time, let us move forward with today's event.
The topic of today, Catch Them Young, investment in promising unlisted stocks before IPO. First of all, I would like to explain as to what this exactly means. In the sense that what are the companies that we are talking about in terms of investing into. So, as we all know, that companies could be divided into two parts, one which are private limited companies and the another are public limited companies. The private limited companies are the ones which we normally see where a family or a couple of family or a small group of people would get together to start a business, where the shares of the company are closely held amongst that family or that group. Now, a public limited company is a company where the shares of that company are held widely, means they are held by several people beyond the core promoter group as well. Now, this public limited company can be divided into two. It is a listed company or an unlisted company. A listed company is one which is listed on the stock exchange, meaning thereby that the shares of that company would be traded on the stock exchange, while as an unlisted company is one which is also a public limited company, but the shares of that company are not listed on the stock exchange and they are not traded on the stock exchange. Normally, this happens because that company, which is a limited company, has not gone for any offering to the public. The moment there is an offering, which we normally call as an initial public offering or the IPO, then those shares have to be listed on the stock exchange mandatorily. And then we get the quotes on the basis of the trading on a daily basis. So now, going to the presentation proper, please. The first and the foremost question that comes into everybody's mind is, why should we invest in unlisted stocks? The answer for it is quite very simple. It is that we want to catch these companies, these businesses, these investment propositions young, so that we can benefit out of their whatever development which happens in respect of those companies, which is still very much in store. Now, in order to catch them young, and when it comes to catching young, somebody who is into business, we need to really understand the basic scenario, the way the business is in present times. And we need to be very analytical and clear as to why are we investing into these kinds of companies. If we look at the business scene today, businesses can be divided into two: traditional businesses and modern businesses. The traditional businesses are the ones which are into the typical commodity businesses like steel, cement, or maybe infrastructure businesses, which are investing into building of roads and infrastructure and real estate and those kinds of businesses. Then the another examples of traditional businesses could be investing into, say, petrochemicals. Even banking is something which is a traditional business. People have been into these businesses since years and years, and let us say ages together. Now, what are modern businesses? Modern businesses, which we normally identify as startups, are the ones which are predominantly into IT-enabled services, which is providing services on the basis of the information technology backbone, pharma-related services or pharma-related businesses, which are quite research-driven, financial services, which are not that conventional banking services, but uses a lot of technology, and they are scalable in a very big way. Then another example of modern businesses is even retailing. Retailing has really picked up in India and globally since a little time, but still there is a lot of penetration which is to be made in the activity of retailing, and hence it can be definitely identified as a modern business. So there is a clear-cut divide as to what is the traditional business and what are modern businesses. Then, excuse me. Then what we need to look into is what are the features of a traditional business. When we look at the features of a traditional business, there are large tangible assets, meaning thereby investments into land, plant, building, machinery, stock, receivables, and so on and so forth. While as when it comes to modern businesses, their investments are into soft investments like human capital, technology, brand. A lot of cost goes into customer acquisition and creating a unique experience for the customers. We know the people who have been into online retailing, online selling, have burnt a lot of cash in giving an experience, providing an experience to the prospective customers so that they can understand the value of acting, behaving, and transacting in a certain manner. So that is the way they have to spend money from time to time. Then when it comes to the gestation period, the gestation period for traditional business is comparatively quite short. One would think that it is not a short period. One has to buy land and then erect a building and infrastructure and all these things. But the fact is that all these things can be really built in, say, maybe 2, 3, 4 years' time. But when it comes to modern businesses, we are trying to change, or the modern businesses are trying to change the pattern, the behavior, the way people act. And hence, it has a very long gestation period. Then the risk on capital invested is, in case of traditional business, is much on the lower side, because everything is quite visible and understandable, and people have experienced it since years and years together. But when it comes to businesses which are of the modern type, which I discussed, the risk on the capital loss is quite on the high side. Then, last but not the least, which is a big area of debate across the globe in the present times, is that in order to arrive at a valuation of a traditional business, that is quite easy, for the reason that one can quantify the value created by the business in terms of its earnings, and on the basis of it, you can value a traditional business. But when it comes to modern businesses, they command a lot of premium, but the business value created by them on paper seems to be limited. So it so happens that the unicorns of present times are loss makers when you look at their profit and loss account. So in order to arrive or ascribe a valuation to a modern business is quite challenging. Then what are the kind of investments which will fund a traditional business? When it comes to traditional business, the funding of that traditional business would come from the promoters, the people who are setting up that business. Then it would be in terms of debt, loans from financial institutions, and maybe from some investors who would lend debt capital. And if these amounts which are in the nature of promoters' contributions and debt are not sufficient, then traditionally, since years and years together, people have been accessing the capital markets and raising money from the capital markets by way of IPO, and going to the capital market saying them that this is the kind of project that we would like to go forward. We'll be manufacturing steel, cement, or whatever, and this is the capacity that we are trying to build, and we are planning to sell shares by way of IPO. So that is the way they would raise capital. But when it comes to modern businesses and the businesses which are of the present times, they are basically good ideas, workable ideas, different ideas, path-breaking ideas. And these ideas need risk capital. By that, what I would mean is that they require investors which are like angel investors who are prepared to take risk. They are like venture capitalists who would support a venture on the basis of the idea and the confidence which they would have in the promoters or the people who are trying to build on that modern business. Then at a later stage, these modern businesses receive capital in the form of private equity. So this is the way normally the modern businesses are funded. Then when it comes to risk on the investment, the risk on the investment is quite limited. And while as in case of modern businesses, the risk on the business is quite high, but it is also important to know and understand that the return potential on a traditional business is definitely limited, because those businesses are known to the world at large. But when it comes to modern businesses, then the return on those investments could be quite high. Then when it comes to, say, how will I monitor those investments which somebody has made in either of these businesses? When it comes to traditional businesses, one can conveniently understand and monitor the kind of developments which are happening on the business development front. When the business is being set, the business is ongoing, one can easily understand how the things are going ahead. But when it comes to modern businesses, it's quite tough to understand that whether that business is really doing well, because at the end of the day, it is making huge losses. But still, there are people, there are investors, there are eyes who see that there is a lot of potential, and a day would come when these investments would work multi-baggers. Then the exit means the disinvestment of the whatever investments which have been made in traditional businesses can be done in an orderly manner or a calibrated manner, for the reason that there are prices, there are valuations which are available, which are understandable, and the market also recognizes that this is the business is to be valued in this manner. But when it comes to modern businesses, it is quite tough to understand these businesses, and hence when to exit and when not to exit and when to hold on those investments is quite a challenging thing. There have been times when people have left such modern business ideas just before those ideas became big time ideas and they changed the way people behaved. Now, let us look into that. If we don't catch these modern businesses young, what is the consequence of missing them? Say, if I don't invest into these modern businesses and I continue investing in those traditional businesses, then what is the consequence? The consequence is that I would not be participating into greatest success stories of modern times, and those are the companies which could be game changers in the future. Then I would be deprived of returns which are multi-baggers. Traditional businesses would give a return which is in terms of certain percentage of the capital that is invested, which is a return, which is a good return or a return beyond a fixed income return, and the investors are happy about it. But when somebody invests into modern businesses and tries to catch the businesses young, then there is a potential to really make multi-bagger returns. So the traditional businesses, as I said, would offer an ordinary kind of a return, while as a modern business can have a potential to offer extraordinary returns. Now, if these modern businesses are acquired through an IPO route, that is the initial public offering route, then what would happen is that everybody would know what is the potential, and there would be a lot of time which would have already elapsed for the company's idea to mature into a successful business. Only then those companies normally come in public domain for the public offering. And that is that idea, that plan, that business is quite evident and visible to everybody and to the world at large, and valuations would be ascribed accordingly. But this catching them young, buying modern businesses early in its life cycle is not free from its hazards. The first and foremost hazard is that it is a great pain to select a business idea or a proposal. Not just a pain, but you require that vision, that understanding, that foresight to really figure out that this is an idea which will be the game changer in the future. Then, in order to monitor the way the business is going ahead in terms of its development, its performance, is something which is also challenging, because the investor has to participate on a day-to-day basis or periodically at least, and try to figure out whether that idea is taking shape, is the idea is getting executed in a right manner or not. So an efficient execution of this idea is also quite important. And if these things don't happen right, if the business is not rightly identified, the development and the execution and the performance cannot be monitored well, there are chances, or a lot of chance, that one might not just make a loss, but lose the capital absolutely. And finding the exit opportunity at the right time in these kinds of businesses might be difficult. Then, in order to see that, we really want to catch them young, but we want to see that these hazards of catching them young and that part of the difficulty is mitigated, then how would we go ahead? So, how would we encounter these hazards? So, the way we have thought and the way we can plan is that investing into companies and businesses which are not into a baby stage, child stage, but they are young. And so we are free from the fear of child mortality and infant mortality. So by that, what I would mean is that when a business is very young, it's just budding, it is just picking up, yes, it could be available at a very steep and deep discount. If it is in a stage which is a few years, there also the valuations are quite cheap, but the risk associated with investing into those kinds of businesses which are either into baby stage or child stage could be quite high. So, as we have kept the title of this presentation, the topic we have selected, that catch them young, not which are babies or children, but they are at least youngsters, but they are not full-grown adults, or they are not elderly businesses, and the valuations at which they are available, they are not that of a full-grown adulthood business or an elderly business. Now, the supply of stocks of these kinds of companies which are young and definitely promising is available through ESOPs, the shares which are available to the employees through ESOPs. But those shares are available to their respective employees, but not to me and you who are not working with those companies. At times, these shares are also allotted on preferential basis to certain shareholders. But those allotments are in big chunks and allotted to specific shareholders. What happens is that employees and the people who are allotted, or the institutions who are allotted on a preferential basis, they divest from these stocks for their own specific reasons. Say, in case of an employee who has been allotted shares and who has been working since maybe a few years, he might need money for his own reasons, and he might be inclined to sell the shares to anybody who would be wishing to participate in that company which has not yet been listed on the stock exchange, and the IPO has right now not been offered to the public. So the universe of these unlisted stocks is quite large, far and wide. But an unlisted stock per se does not mean that it is worthy of investing. There are several parameters which we need to understand and take into consideration before going for investment into an unlisted stocks. So the question before us would be that how to invest in these unlisted stocks and what could be the parameters for selecting those unlisted stocks. The first and foremost parameter, according to us, is the liquidity of that stock. Meaning thereby that there should be adequate liquidity for their stock for wider participation. So if there is a stock which is so good, a company which is so good and which has got a good potential or a very good potential for that matter, but if it is not available to people for trading in a certain level wherein transactions can happen, then the price discovery would really not happen. And when the price discovery does not happen, the real value cannot be ascribed to it. That is the first difficulty. And the another difficulty, which is very obvious and simple, that we will not be able to buy or acquire stocks of that company if we want to make any decent amount of investment. Then the second aspect or the second parameter which we need to take into consideration is that it has to be in modern day businesses. I have been talking at length explaining the difference and the dynamics between the traditional businesses and the modern businesses. And by that, what I always wished that if somebody really wants to buy a participation or equity into traditional businesses from the stocks which are already listed on the stock exchange. There are several companies which are into traditional businesses which are available in the unlisted space. But in our understanding, it is worthwhile to buy stocks of those traditional businesses from the listed space rather than the unlisted space. Then the next aspect is that, and this is to my mind, one of the most important aspect is the promoters should be that of an absolute impeccable record, and they should be promoters who are having a good track record in their business. Not just that, but they have been fair to their shareholders and protecting shareholders' interest as well. Then the next aspect that we need to look into is that it needs to have a track record. By that, what I would mean is that it might have a long or short track record, but the track record has to be definitely quite strong. Then the next parameter that we need to take into consideration is that those businesses where we are planning to invest or select investments into those stocks which through the unlisted route which have got a moat. By moat, what I would mean is that they have got some specific or a special competitive advantage which others would not have, and for others to really reach at that level of that business level, it could be quite difficult for them. And that is what is the moat, which is acting as an advantage to those respective companies. Then the next parameter that we need to take into consideration is possibility of value unlocking. Because whenever we are making an investment, we are making an investment to see that the value of those investments, the profit and whatever appreciation that we could generate from those investments are becoming, or they become really evident. So the possibility of value unlocking by means of an IPO, that is an initial public offering, is something that we definitely need to look into, or rather take into consideration. Then the comfort in a longer holding period is also something which is quite important to us, because it might so happen that we might not see an IPO in respect of those stocks for a quite long period of time. And if those companies do not go for an IPO, then are we comfortable, or will we be comfortable holding those stocks for a long period of time? That is also a parameter that we need to think, and on the basis of which we need to decide on those investments. Then last but not the least is that what is the kind of valuation that we are paying for this unlisted stock. And we need to compare those valuations with its peer group when we are trying to figure out that this is the right valuation that we can ascribe to this unlisted stock. Now we go into what will be the procedure of investment into this unlisted stock. When it comes to our company, if somebody is dealing with us, then the minimum amount of investment one should be going for in these unlisted stocks, maybe more, one or more, should be at least 50,000 rupees. The requirement would be that one needs to have a demat account. Thereafter, in order to confirm the deal, we would require certain basic documents and a deal confirmation from the prospective buyer. Thereafter, on payment of the agreed price, the demat account of the buyer would be credited with those respective stocks. The procedure is quite simple and rather absolutely seamless. When it comes to buying of these kinds of unlisted stocks by non-resident Indians, there also the process is quite simple. The non-resident Indian needs to have a demat account, and after the deal confirmation and on receipt of certain basic documents, then those shares could be credited to his demat account, and the payments have to be from the NRO account. The reason being that if somebody is making any payment from an NRE account and wants to invest into these stocks, then it has to be with the FDI, that is foreign direct investment related compliances. But investment into these unlisted stocks through the NRO account is something which is absolutely seamless. On receipt of funds, then the stocks would get transferred into the respective demat account. And if in case, if a non-resident Indian wishes that my investments needs to be repatriated after a certain period of time, even that aspect is not difficult, because when they are bought from the NRO account, the proceeds on sale of it will also obviously go to the NRO account. But thereafter, from the NRO account, under the $1 million per person per year scheme, these amounts from the NRO account can be transferred to an NRE account or can be repatriated outside of India. then we should also understand that what should be an ideal investment horizon for anybody who is investing into these unlisted stocks. The ideal investment horizon for anybody who is contemplating to invest into these stocks have to be at least 5 years and beyond, because the best return on these investments could be available only if we have got time on our side. And our candid advice would be that if there are funds which are attached to some goals of life, then those funds should not be invested into these unlisted stocks, because the price discovery really happens after the IPO. And at times, what happens is that it could take a good amount of time for a company which is a good, well-performing company, but for that company to really go for an IPO. So the exit opportunity which could be available through the IPO might be delayed, or it might get a little more longish than what somebody might think of. And otherwise, then by liquidating these investments through the IPO route, then there could be a sale of these shares into open market, which could be also possible. But if there is a lack of liquidity at that point of time, somebody who is investing into these stocks have to have that patience, courage, and resilience to hold on those investments during this entire investment journey, which could be quite long as it comes to the comparison. Then we'll go to the aspect that why should somebody invest in these unlisted stocks through Ashutosh Financial Services Private Limited. The first and foremost aspect is that we have a ready available inventory of these unlisted stocks where we have confidence and we have selected. So the 5 stocks which I have discussed and mentioned in this presentation, we would have a ready inventory of these unlisted stocks. We provide daily quotations for these unlisted stocks with its available quantity on demand. We take care of the documentation and paperwork in a precise manner the moment somebody transacts with us. And the most important part when it comes to us is that we have tried to do our best in order to make a selection of the unlisted stocks which somebody should be going for, and how to build a portfolio of these unlisted stocks. We also provide complete advisory support on the taxation and regulatory aspect of investments into the unlisted stocks. Now, looking at the regulatory aspects of the unlisted stocks, investment in these unlisted stocks is perfectly legal, and residents as well as non-resident Indians can invest into these unlisted stocks. These are investments into public limited companies, and hence these stocks of these public limited companies can be brought and sold in a seamless manner. You can buy these stocks, make investments, and also seamlessly sell them. One thing which anybody who is planning to invest in these unlisted stocks should be absolutely be mindful of is that the moment any company which is in the unlisted space goes for an initial public offering, there would be a lock-in for 1 year for all those people who have acquired shares at the time when it was unlisted. So by that, what I would mean is that if I have acquired shares of any of these companies which I am discussing, then, and if there is an initial public offering, say tomorrow, then after the initial public offering for 1 year, I would not be able to transfer the shares which I have bought at the time when this company was unlisted. So any company that we are investing into, we need to have a lot of conviction and confidence when we are planning any investments into it. Then going to the taxation aspect of the unlisted stocks related investments, it is a little different than the listed stocks. In case of unlisted shares, the period of holding to qualify it for long-term capital gains would be 24 months. So if it is held for a period of less than 24 months, then it would be taxed at the slab rate. If it is held for a period of more than 24 months, then the taxation would be 20%, but indexation would be allowed on these investments. Dividends from these unlisted stocks will be taxed at the slab rate of income tax. When it comes to non-resident Indians, when they pay tax, or rather when they make investments in these companies, and if they are made out of foreign currency, they will get a benefit of foreign currency fluctuation under Section 48 of the Income Tax Act. Then the taxation for them would be till 24 months, it would be slab rate. 24 months and beyond period of holding, it would be taxed at 10%, and it would be without any indexation benefit. The dividend for non-resident Indians will be taxed at a flat rate of 20%. And for non-resident Indians who are tax residents of jurisdictions outside of India, the income on these either capital gains or dividends would be taxed in their respective jurisdictions according to the taxation regime of those jurisdictions. But in most of the cases, they will get the credit of the taxes paid under the double taxation avoidance agreements which India would have with those respective jurisdictions. I have tried to deal with this entire topic of unlisted shares and investment into unlisted stocks with the purpose that we need to catch them young. We need to catch these modern business ideas young. But still, if you have got some kind of queries or clarifications, you can contact the numbers which are mentioned on the screen right now and the ones which would be mentioned in your invitation at any point of time. If you want the quotation of these unlisted shares from us, you need to contact these numbers or the ones which are mentioned in your invitation through which you have participated in this presentation. Lastly, I would like to put forward this message to the investors. If we want different results, you have to try different approaches. This is what Albert Einstein said. And when I correlate with the investments and the presentation which I'm making, I would put forward that when somebody is planning to invest in a manner which he has been investing into, somebody has been investing into fixed income instruments, stocks, maybe mutual funds, maybe real estate, and that is what he has been doing since several years, then one is all set to get the similar kind of result and experience which they already had. But if they want to get a different kind of an experience, if they want to go for participating into modern businesses, if they want to have or gain some multi-bagger kind of returns, then they will have to have a different approach of investing by investing into ideas which are the future of investing and future of business. The views presented by me are my own personal views, and we do not purport to give any investment advice through this presentation. Wherever we have put forward any data, we have put forward the references from which where we have got this data. This brings me to the end of this presentation. Thank you very much. And if there are any questions, I would be...
Okay, so going ahead with the first question, one of the participants has asked about any examples of unlisted stocks which have gone for an IPO in the past and have delivered very good returns.
There are several examples of companies which have gone for IPO, and I would say that so many of them, so many successful companies which have been listed today, they have been into that unlisted space. And even in the recent times, the entire HDFC group companies, the earlier ones, the HDFC AMC, the HDFC Life Insurance, they were all available in the unlisted space. And thereafter, they went for an IPO, and with the grace of God and the initiatives of the people who invested, they really made the people who invested in those times when it was in the unlisted space, they made multi-bagger returns. And there are several examples of it.
Right. Another participant has asked about the price of NSE shares as of now, the current market price, what it could be.
What we can do is that we can give them a quote tomorrow, and we can be in touch with them, giving them the price of the National Stock Exchange Limited, NSE of India Limited share, because it fluctuates every day. So tomorrow we'll be able to give, or rather Monday for that matter, Monday is the working day, next working day, we'll be able to give them a quote of the prices which they would be looking to.
Right. Then we have a question that will there be any kind of brokerage which is involved in these share transfers?
When somebody buys those stocks from us, then we sell it at a price. So there is no question. It is a buyer and seller relationship. We are sellers and they are buyers. So there is no intermediary which is involved. We'll be selling at a price to them. And hence there is no brokerage which is involved. But whatever are the charges of the depository or those kinds of operational charges, those charges would be something which the investor would be supposed to bear at the time of credit of any shares, or for that matter, these shares as well. But there is no brokerage that somebody is supposed to pay to us specifically.
Right. Okay. And what is the minimum amount of investment that one needs to make in all these 5 companies mentioned?
When somebody is planning to invest through us, one order or one buy order to us has to be at least 50,000 rupees.
Okay, and that could be in one or more than one stocks of the choice of the investor as well.
Yes, absolutely.
Right. Then how is the buy and sell price for these companies determined? What is the parameter?
The buy and sell prices of these stocks are determined on the basis of the demand, supply, and what value that somebody would like to ascribe. But when it comes to objectively understanding what is the value that somebody needs to pay or ascribe to it, we have tried to carry out a detailed analysis, and that is what we published in the presentation in terms of comparison. And thereafter, the way we buy stocks from the stock exchange in the listed space as well, that is the way one needs to take a call and buy. There would be a lot of information. Annual reports of all these 5 companies are available, where one can study the financial parameters of all these companies. There would be comparisons which would be available, which we can provide. But then at the end of the day, it all matters as to taking a call on it.
Correct. Okay. I think Mr. Vinodrai Mehta has raised his hand. Please unmute him.
Yes,
After
we'll
which
unmute
we
him.
can proceed with the next question.
Yes. Unmute Mr. Vinodrai Mehta.
Hello.
Yeah, Mr. Mehta, please.
Yes, thank you very much and many compliments to you, Mr. DK. You have been doing wonderful work for this really not known topics. This is good. Now,
Thank
one
you.
question to you. It's about any unlisted company which is working in the field of mapping, they call it. This is space mapping. This is a technology sold by SAC ISRO to many companies or are under consideration. And they will come up in the issue with the IPO at a later date. But if you have any such company known to you or you are dealing with, it's about space mapping and its applications. Please help us whenever you can.
Sure. Presently, the kind of confidence that we would have in the companies are these 5 companies because of the parameters which I said. We are confident about putting forward to our clients. But if there are companies in this space which you are talking of, then we'll definitely come back to you. But if you are really interested into investing into this futuristic kind of technology, we have our platform of investing into US equities, where we have a portfolio which invests into stocks of companies which are into EV and AI. EV is electric vehicles and artificial intelligence. Right. So there you can definitely find companies which are in the listed space, but listed in USA, which are into these kinds of activities, which are quite futuristic and interesting, and which could be of a lot of immense value in times to come.
Okay, that's a good sign of your knowledge. And of course, presently what you have given 5 companies are also worth our thinking about. Thank you very much.
Thank you.
We have 2 questions on our YouTube comment section. One of them is in line with the previous question. What is your view on the sectors like artificial intelligence and pharma? And can you recommend any stocks based on those sectors?
Both these sectors, artificial intelligence and pharma, are extremely promising. They are extremely promising, and they are modern businesses, futuristic businesses, no two doubt about it. But if we come across through companies which fits into those 8 parameters, all the 8 parameters, then we'll be able to put forward to our client and say them that forget about everything. You can hold these stocks for maybe 2, 3, 5, 7 years, and you will definitely make money in our view. And that is the kind of conviction that would have. So the day when we have a conviction in the stocks which is fitting those 8 parameters, will definitely come forward in respect of those businesses which you have said.
But as you suggested, those sectors, companies based on those sectors are available in US for investment.
Yes. Definitely, these kinds of companies which we are talking of, they are a part of our portfolio, which our investors invest into our platform of investing into US equities. And they have already invested into these kinds of companies, which are, as such, as I repeat, in the listed space in US, but they are quite futuristic and into those modern businesses.
One of the participants has asked about the price of HDFC Asset Management Company when it was unlisted and when it was traded in the unlisted stock market.
Okay. We can provide those details, but the fact is that people made huge returns. People made huge returns on buying in an unlisted space, and then it got subsequently listed. But then there is still a waiting period of 1 year after which somebody who has bought from the unlisted space can really sell it. So you need to be very sure about the company. You have to be absolutely thorough that if I am holding this company for a long period of time, even that 1 year and whatnot, then I don't have any difficulty. We can provide the details in terms of numbers as to what was the straightaway gain which somebody made by investing into unlisted space, because those unlisted transactions start way back. Since years they are traded, and then the IPO comes in the market.
We have a very interesting question. Since these shares are acquired through ESOPs like employee stock ownership plans, private placement through some shareholders, will they carry the same kind of rights as the other shareholders? For example, if there is a bonus, then will these shareholders be eligible for that just as the other shareholders are, or there will be some difference in the rights?
The companies which we have identified, and normally that is the case, it is that all shareholders at a certain point of time have to be treated in the same manner. So it will be treated pari passu with the all the shareholders would be treated like that evenly. So there won't be any differential kind of right or preference or advantage or disadvantage. Whatever is going to happen in terms of the advantages in terms of a right being issued, a bonus being issued, would be available to these shares also in an even manner that is absolute and clear.
So we are done with the questions.
Sorry, please, Rajit, go ahead.
Today's entire presentation will be uploaded on our YouTube channel immediately after the session. In case you have any further questions, the same can be communicated to the contact details shared earlier in the presentation. We will be grateful to solve them. We thank you once again for your support and for joining us in this webinar today. If any participant wishes to join again, the repeat session of this topic is scheduled tomorrow morning at 11 a.m. in Gujarati language. We look forward to arrange more such webinars and public presentations to see you again. Thank you and have a great day ahead.
Thank you. Thank you. Yeah, there is a question, Rajit.
Yes, there is a question.
We'll take it. We'll take it.
Okay.
It is from my good friend.
Right. Will there be quarterly results issued by these companies?
Yes, all these 5 companies, they issue their results, but not on a quarterly basis, because they are not mandated because they aren't listed on the stock exchange. Their results would be issued, but on an annualized basis, and that is what is required under the company law. But because, as I said and I repeat, they are not listed on the stock exchange, they are not under an obligation to publish their quarterly results, and quarterly results would not be available or might not be available in respect of these companies. Thank you. Thanks.